For a reader on the themes set to drive the markets this week, Pete McGuire joining us from XM. Pete, a very good Monday morning to you. Of course, speaking to you in the heart of Sydney lockdown at the moment. Interesting to see how this plays out, isn't it? Because it's a very fluid situation. Do you think it will be weighing on investors' minds at the moment?
Well, good morning, Andrew. And first off, I think what's going to happen is give plenty of people the opportunity to sit back and watch something like ausbiz and take on board information. So from retail trading perspectives, I think it really highlights opportunities and it gives people, I think, the sense of sitting back from the office and probably getting an appreciation of what's going on globally, because what the situation in Sydney is far different to what's going on in Europe at the moment and certainly in America.
Yeah, very much so. All right, well, speaking of America, let's take a look at the situation there. As I said, broadly, markets moving higher again at the end of last week. A lot of this, of course, is what the Fed's next move will be. A close eye will be on the latest jobs numbers. We're going to get that as far as June's non-payroll figures are concerned. What are you looking at?
Around about a 600,000 handle, Andrew. I think it's well down from that million magic number, but 600,000 is still very impressive. Unemployment numbers will continue to drop in a percentage term. What the issue has been, what we've noticed is that there's a lot of jobs out there in America, but the unfortunate side is we haven't got the workers or their capacity or capabilities to match those new job numbers. So that seems to be a little bit of a handbrake at the moment. It's probably retooling and re-engaging and re-educating the workforce. That's not a bad thing. I think it's lifelong learning, and we're very conscious of that. So we're looking at that 600,000 number. And that'll be Friday. And we've got a little bit of other news coming out this week that's going to also weigh on markets.
Yeah, well, that's certainly also a story playing out in Australia at the moment as far as vacancies increasing, but clearly a shortage in skills at this point, given the borders remain closed. So, Pete, what's your outlook then for the Fed movement? Because a lot of noise has been made about that Jackson Hole meeting in August. What are you expecting?
Absolutely. I'm waiting for August to come through, Andrew. I think if 600,000 is the number this week, and remember that analysts have been wrong traditionally this year. They've been out by sometimes 50 to 80%. Trying to pick that non-farm payroll number. So let's see what happens on Friday. Also moving forward as far as August. If it underwhelms and it's a 500,000 number, then the Fed's not going to do anything and going to say very little, because what they spooked the markets over the last week and a half, and that's been very much demonstrated across the currency markets. And have a look what happened to gold. So I'm just keeping a close eye on Friday, what the storyline is, mood. The US equities are just booming, as you mentioned. S&P continues to every week nearly another record high. So that overall good news story as far as the equity markets globally, we're at 7,300. That's nothing to be sneezed at either. So it's all about upward trajectory, and I think this Northern Hemisphere summer is going to be fairly strong for equities.
Okay, well, let's move to Europe, see how they're standing at this point. Clearly, that reopening boom gathering pace, despite the fact we're seeing a rise in COVID cases. But of course, that's countered with a strong vaccination rate across most Eurozone countries, including the UK at this point. But that said, the ECB looking the least likely as far as the central banks to move.
Absolutely right. I'm waiting to see, and that's so true. And then the other side, I'm waiting to see those Germany inflation numbers. They're out for June, out Tuesday. So as they're being their largest economy, I want to get a true indication as far as what the theme is going across the Eurozone. We've got very, very strong PMI survey numbers. They've overwhelmed the market, and that really is a feel-good factor, as you mentioned, right across that Euro basin. So it's a re-engagement. Tourism certainly increasing, and a general feel we have a large presence globally, but our business is centered in that Eurozone. And I talk to teammates over there daily, and it's very much a different frame of what it was mentally going back to January or February. It seems to be a real return to, the Greek islands, travel. Everyone seems to be back out enjoying themselves, Andrew.
Yeah, that's obviously their summer compared with what's going on in our winter at the moment. Pete, let's take a look at Japan. What are you seeing there at the moment? Of course, the Olympics due to start just in a couple of weeks, and
Yeah.
Yeah, confidence not great in terms of the Olympics, but more broadly, I think confidence looking pretty good.
Confidence is good, yeah. I mean, the Nikkei's performed extremely well, Andrew, over the last year. It's been a boomer of a market. The yen's been choppy. It's still sitting in that 110.80 range. I not surprisingly, that US dollar is hit up. So I don't think that there's that Japanese yen US dollar trade isn't one that I'm keeping a focus on. I'm more intrigued in, I think, Euro yen. There's a little bit more movement there, or even the pound versus the yen. But yeah, we've got the Olympics. Let's hope it's a good games. I'm sure that the athletes are very, very primed for it. They're a year behind, and the focus has got to be, confidence and performing at your best. And I'm sure that will be the general mood. And Japan is performing reasonably well. So yeah, I hope it's a very good time for them over there. They've had a pretty tough year. And let's just hope that Japan, really booms forward after this whole Olympic saga is put behind us.
Yeah, absolutely. Looking forward to some good news there, hopefully. Pete, just finally, another issue to watch this week, OPEC meeting. That'll be on Thursday. Expectation perhaps that they will increase production, but how's this likely to play out on markets? I guess particularly Canada and the CAD there.
Well, the Canadian dollar, I think it'll probably go a little bit higher against that US dollar index. It's sitting at that 123 mark, that 123 handle. But the other side, Andrew, that 500,000 barrels that OPEC Plus have, they've told us really what they're going to do. So I'm not looking for any surprises. That'll be out Thursday. Though crude has been an incredible market, I'm not suggesting from a trading perspective there's a lot of money to be made out of it. It just seems to be creeping higher. We've got NYMEX crude sitting at $74 a barrel for West Texas Intermediate. That's unheard of. We haven't seen that for a number of years. And Brent's sitting, Andrew, at 76. So many analysts are now saying is $80 the new handle? Inflation, that whole mood to the upside. I wouldn't be surprised to take an 80 handle out in July. I just think that momentum may increase. Let's just see what OPEC are prepared to do and general consensus. But inflation's pushing the market higher, and possibly 80 is the new normal, Andrew.
Hey, Pete, great to get your take on the week ahead. Have a good one. Thanks for joining us from XM.
Thank you very, very much, Andrew. Bye.